Robust June quarter earnings failed to lift shares of state-run oil marketing companies or OMCs in the past month. Shares of HPCL, BPCL and Indian Oil have shed 9 to 11% since their respective earnings announcements between July 26 to August 4. In comparison, the BSE Sensex and the Oil and Gas Index are down 1% and 3% respectively. The weakness comes amid a continued rise in global crude prices that topped 9-month highs of $88.7 a barrel on Monday. A busy election calendar ahead that may see the government keep a lid on prices of petrol and diesel is also a dampener, analysts say.
The government has introduced in a way a subsidy on the LPG portion, which tells you that probably as we go ahead, the government will start to introduce more and more subsidies into essentially the petroleum products that are retailed, and that is not necessarily viewed positively by the markets. There is any change in the duty structure per se, that will necessarily have to be passed on by the oil companies. So it doesn't really alter the profitability metric for the oil companies. What could potentially be damaging is if some portion of that subsidy is being made to be borne by the oil companies, that could potentially hurt them.
Besides, the higher crude prices in recent months have again begun to erode the marketing margins of OMCs. Given this, analysts at Prabhudas Leeladhar expect OMC's marketing margin to normalize to Rs 3 to 3.5 per litre given the upcoming elections and uncertain crude prices. Thus, the stocks are unlikely to see any respite in the near term.
From a tactical point of view and from a portfolio point of view, it is advisable that one remains a little underweight on the oil sector.
Long-term investors, however, can still remain invested given the comfort of strong refining margins and low valuations, experts note.
OMCs over a period of time tend to recover their marketing margins. If we look at the business in totality, the refining segment profits are significantly high, and to an extent they can make up for the weakness in the marketing segment.
Bansal suggests that apart from short-term events, investors should consider strength in the refining cycle, deleveraging of balance sheets and attractive valuations before taking an investment call on OMCs. Today, on September 5, Dalal Street action will remain stock-specific. The service's PMI data for August will also be on the radar.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.